All right, we're going to move on to gold now, because back in 2008, when gold was trading at, around $850 an ounce, our next guest called a 1,500 trading level right around this time of the year. And right now, gold trading at, let's take a look, 1,596. So he's just about spot on here. What exactly is his call for 2012? Our next guest is Scott Redler, Chief Strategic Officer at T3live.com. He joins me now right here on the floor of the big board. Scott, before we get to the forecast, let's talk a little bit about gold's identity here, its role, because all year long it's been traded as a safe haven. People looked at it as the safe haven when the crisis got worse in Europe. But it didn't seem to be a safe haven this week.
No, it's going through an identity crisis, and at times over the course of the past 4 or 5 years as I've been trading it, that happens. And it became a very, very crowded trade this year. Everyone thought you could park your money in gold, it's going to be okay. And then technically, it started to get damaged. You saw that reversal in September, then we had that wedge type pattern, a month back, and it's resolved to the downside. And right now, gold is below its 200-day moving average. So technically, it's still under pressure, and people don't know what to make of it. They don't know what it's forecasting for next year. People are thinking maybe, there are deflation in the cards, or the euro is going to get hit that much more next year. The dollar is going to go higher, so that's not good for gold. Or even countries that have been hoarding gold, might need to sell some in order to, diversify into other assets because they have to.
Maybe.
Exactly.
Okay, so cash was seen as more favorable than gold, at least for this week. When would you start coming in to buy again?
The last few days I told people to start covering their gold if they were short, that this downdraft was fast and furious, and take some money off the table. We just broke through the 200-day. Now, historically, when gold breaks through the 200-day, it stops a lot of people out, and then within the next week or so, it reclaims the 200-day, and then it starts moving higher again. So I think people need to see if that changes. For the next week or so, if gold can't reclaim the 200-day, if we can't get back above 1620, 1630, I do think that the low of this week will not be the low moving forward, and we could see 14 to 1440 before we get some kind of sustainable bounce.
14 to 1440, okay. So clearly a reminder that gold is not immune from the record volatility we've seen across every other asset class. So far up until now, it had seemed like a sure bet. And over the longer term, gold's still very much part of its bull run because it's been up for 4 straight years now.
Yes, and right now it's coming into like a midterm uptrend where it's trying to hold. It's trying to hold above 1550, 1560. So people are watching that uptrend because that uptrend has been intact for multiple years. So if that breaks, you're going to see the psychology shift. It's already becoming negative. So if we break that and we can't reclaim it, people might even start just running for the exits, and it could make even more of an extreme move down to what could be about 1200 to 1220. So right now, if you're long gold, I would be long light. I like to use a tier system, and I've recommended if you have a long-term gold thesis, only tier 1. And if you're not in it, I would wait a little bit. I do think that there'll be better entries moving into 2012.
Okay, so people are rethinking gold status right now in light of what's going on in Europe. What about fundamental demand from places like India, like China, which have really been driving the price of gold higher because of the better economies there and the demand from those people?
Well, I work very closely with Alex Steele, who reports on gold, and she's been telling me also that demand is, could be in question because, people are talking about China now softening. They think that perhaps we can have a hard landing. So why are they going to keep going out and buying gold when they have to do other things with their finances or their assets? In India also, the stock market's been down. People aren't feeling good, so the demand for physical gold might not be there for the holiday season. So gold has a lot of things going against it. And then you have someone like George Soros, who's one of the biggest holders Paulson of the GLD, and he had a horrible year this year. Sorry to say, but a lot of people also did. So if all of a sudden he starts out negative and he starts getting margin calls or redemptions, and he has to force sell, and that's the next level that could happen with gold, is all of a sudden forced selling because people didn't expect this. And then, so there's a lot of things to look out for gold. So the normal identity that it's had over the course of the past few years has changed. So there's no, I would say, or safe havens, or there's nothing that's set in stone, as we've seen across the world.
Nevertheless, gold is still up on the year, we should mention, around 10%.
And I do think if you have a long-term thesis with gold, you should have some as a hedge, but just don't go to bed sleeping at night that it can't go lower, because it can, just like everything else.
We saw that this week.
Exactly.
Scott Redler, thank you very much. He's Chief Strategic Officer of T3live.com.